Hello again, this is Chad Stayskull, President of Eagle Wealth Management. I'm here with our Educational Economic Update for October 2016. In this month's video, we're going to discuss some of the events that influenced markets in September to hopefully help you understand what they could mean for you as an investor. As always, to keep those wonderful regulators happy, please stay tuned at the end of this update for a required disclosure statement. Well, the third quarter ended in volatility for U.S. financial markets. After a fairly sleepy summer with historically low volatility, markets became more turbulent in September. I want to talk about some of the headlines that drove market movements last month. As has been the case for much of this year, the Federal Reserve was again the source of much speculation. The central bank met in September and they voted on interest rate policy. They decided again not to raise rates. The Fed is in a tough spot right now. It needs to bring rates higher to avoid overheating the economy. However, central bankers also need to be careful not to raise rates too fast or too soon, or they risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed knows there are risks on the horizon. So the question is, what do we expect to come next? Well, it's not likely the Fed will raise rates at the November meeting. This is when the presidential election is still a political factor. So that makes the December meeting very important. Wall Street thinks the odds of a higher interest rate hike in December at over 60%. Interest rates have complex effects on the economy. Corporate profits, markets, consumer finances. This is why investors care about rates, where rates are going. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of this year. The third release of the second quarter economic growth data showed that the economy grew at 1.4% in the second quarter. And this is slightly better than the last estimate last month of 1.1%, but still below prior expectations. Two unofficial projections of gross domestic product show that the economy may have grown 2.2% in the third quarter. However, forecasts have come down steadily in recent weeks, and it's possible official growth numbers could disappoint. So what can investors expect in the coming weeks? Volatility and, well, probably more volatility. Markets are grappling with a lot of uncertainty, especially ahead of the November election. We also know the Federal Reserve wants to raise interest rates this year. On top of that, there are still concerns about oil prices, and we're still finalizing what's going to happen with Britain's exit from the European Union. Overall, we can expect markets to remain uncertain as these important questions are still being resolved. As always, we're here to keep you informed. We're here to answer your questions, whether it's on your plan or the economy as a whole. So please don't feel free to contact us should you have more questions. That's it for this month's Educational Economic Update. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of October 2016. Now, for our required disclosure statement to keep those regulators happy. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 541-330-0220. We'd be happy to talk with you. And while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended for investment advice or solicitation for the purchase or sale of any security. Please consult with your financial professional before making any investment decisions. Thank you and take care.